Let's talk markets now with Carol Schleif, the Chief Investment Officer of BMO Family Office. Carol, great to have you with us. Stellar first half, and you think that the biggest problem the market has right now is complacency. What do you mean by that?
I think, it's interesting, complacency in terms of worried about will we see a follow through. There's still a lot of money on the sidelines, which actually is probably not undue given how rapid the rebound has been. But it's important to keep in mind part of that rebound came as a relief rally, if you will, coming after last year's dual bear markets in both stocks and bonds. But on the other hand, you've had a lot of things that have undergirded a pretty solid economy and decent consumer spending. We're still employed. So complacency, just in terms of there's still potential risks out there that people aren't necessarily fully absorbing. And when the Fed has been telling us persistently higher for longer, and the data supports that higher for longer, and every conversation they have is higher for longer, markets still don't seem like they've fully absorbed that.
Or maybe they have, and this is what we got, Carol. I mean, do you want to remain overweight technology? I mean, it's probably the most telegraphed message in the markets in terms of how many times Jerome Powell, how many times Fed governors have come out with that message. And yet here we are with the NASDAQ posting its best first half in 40 years. Do you want to remain overweight going into the back half?
I think we haven't necessarily been overweight particular sectors. We've been balanced in our risk approach all year, and I think we're still very comfortable being in that balanced scenario. You could see some volatility. You could also see, and the volatility obviously would be unusual relative to what we've seen recently with the VIX at such low levels. But there's potential headline risk still. The markets have done a great job absorbing it in the first half, but valuations overarchingly are higher. There'll be intense attention paid to earnings as we start up that season in the next week or two. And not necessarily just to the earnings themselves, but obviously more to what companies are implying about what their back half and next year looks like. The market's clearly ready to get beyond this year and focus on when do we see the next uptick, which industries play, where do we go? I mean, the markets are optimistic and future looking by nature.
You mentioned the cash on the sidelines, which is something that, we've heard many, many times from various people here on this network, Carol. I'm wondering, at what point do you tell them, or at what point do they decide to get off the sidelines? I mean, especially after you miss a huge rally in the first half, what's the inclination to go long at this point and move that cash into equities?
Well, and I think a piece of it is the fear of missing out. A lot of people came off of last year worried about a continuation of those potential tough markets and looking at cash saying, hey, this is a pretty comfy place to sit. So I think I'll sit there. You also had business sales that happened last year where a lot of that cash initially went into, a lot of the proceeds went into cash, stayed there, and now trying to creep back in. But, the headline numbers when the markets are up 20, 25, or in the NASDAQ's case, 30+% in that first half, even off the depressed levels of last year, people start looking at that and wondering, am I going to miss out? So that a little bit of that FOMO starts creeping back in.